Welcome to another episode of The Financially Free Investor, where you will learn information and strategies on how to become financially independent by investing in real estate, something that is not taught openly in our society today. Financial freedom matters so you can live a bigger life, retire early, and do what matters most to you. Get ready to hear tried and true methods to becoming financially free with your host, Jordy Clark.
Hey everyone, welcome into another episode of The Financially Free Investor. Today, I want to talk to you. I want to tell you the three things that you should be doing right now in 2022 in today's market to prepare for the housing crash. I really don't know if the housing market is going to crash or not. We'll go into it. But look, here's what we should always be doing. Don't invest emotionally. That's tip number one. When emotions are high, intelligence is low. I heard that at a Real Estate Investor Association meetup from a very wealthy individual who was presenting to us. He owns well over 1,000 rental units, knows what he's doing. He looks at a lot of the data, and that was one big thing he said. If emotions are high, intelligence is low. So right now, there is so much fear in the market. And I get it. It's unsettling times. Who knows what's going to happen? Is the market going up? Is the market going down? What's inflation going to do? What are interest rates going to do? Are we in a housing bubble? Is the bubble popped? Is it going to pop? No, all this stuff, right? You read all these articles and it's just so confusing. But I want you guys to just kick all of that noise out of your head. Because at the end of the day, we're investors and we are cash flow investors. So we only buy deals if they make sense, right? And now everyone's situation is a little bit different. It's hard to find these massively cash flowing deals here in Utah because we have a finite amount of real estate. Not a ton of land for us to be able to just go and keep building and building and building like some of these states can. We just can't. So at the end of the day, our real estate will continue to appreciate. I'd say in any 10-year period, values will probably double in the Salt Lake area. So buy good assets that make sense. I just closed on a duplex and I'm not putting a ton of cash down. It was a good deal. I created the deal and we're going to cash flow north of $500 a month on this one deal. And that is in an environment where so many people said, I can't cash flow. Well, they're not looking at enough deals. So you need to look at enough deals. You need to buy things that make sense. And remember, when emotions are high, intelligence is low. Okay, second tip. You need to have 3 to 6 months of your living expenses set aside and you just don't touch it. So I know that everyone's going to say, because I used to say it, I used to have all these excuses. Oh, well, my money is losing 9% a year in inflation and, it's just a drag and there's so much cash just sitting there doing nothing. Well, it's an insurance policy. Your car insurance, if you pay the premiums for a year, let's call it $100 a month per vehicle. You have 2-vehicle household, you're $2,400 a month. Well, that money's doing nothing, right? Until you get in a car crash. Then all of a sudden, insurance is going to do something for you. So, the cash in the bank, 3 to 6 months, depending on if you're self-employed or how long you've been employed or what other investments you have. It's different for everyone. But above and beyond that, I would say if you find a really good deal, just keep stashing cash, set it aside. And then when you find a really good deal, don't be afraid to pull the trigger because buyers are being rewarded right now. The next 9 to 18, maybe even longer months, I think it's going to transition into more of a buyer's market where you can find a motivated seller. Maybe somebody bought 6 months ago and they bought based on the speculation that things were going to continue to appreciate by 30%. And they can't afford to keep that property. So they're going to be willing to offload that at a deep, deep discount. And, in 10 years, if it's in a good area, it's going up in value. Rents are going to go up in value as we run out of space in the Wasatch Front. So just buy good deals and don't be afraid to deploy cash right now just solely based off of interest rates. Like, yeah, sure, interest rates suck right now. At the end of the day though, your rate, if rates continue to go up, you're going to go, oh my gosh, I'm glad I got in at 5.875 or 6%. You know, if rates go to 9%, you're going to love that 6% rate. But if rates go down because the economy can't handle, 9% interest rates and the Federal Reserve needs to drop interest rates to stimulate again, which, by the way, guys, I think they're going to have to do it because we've had a decade of stimulation from the Federal Reserve where they not only did they lower interest rates to zero, but they also did what's called QE, quantitative easing. And guys, that just means they're buying mortgage-backed securities. They're buying mortgages instead of letting the free market dictate pricing on them. And that's why, really, in my opinion, we're seeing a big increase in interest rates right now, is the Federal Reserve stopped buying those mortgages at 2 or 3%. And so now the market out there, their risk-adjusted return that they want to get is more like 6 or 7%. Well, guess where rates are? So there's the opportunity that if the Fed starts buying mortgages to stimulate the housing market, because guys, guess what? They don't want another 2008-ish crash. So is it a possibility that they go ahead and stimulate? Yeah, I think it's a very real possibility that they could stimulate by lowering interest rates, by buying mortgages. There you go. The third tip is double the amount of effort and or deals that you're looking at, because as more and more inventory comes on the market, you're going to need to double looking at everything, rent comps, what other things are listed at, if you're looking at a duplex, triplex, fourplex, what's the unit mix? You need to be looking at more deals. And what that's going to do for you is that's going to give you the confidence, if you've done what we say and you've got 3 to 6 months expenses and you're stockpiling cash to buy a deal, then that's going to give you the confidence when you do find the deal to go, hey, I know this is a good deal. I know it because I've looked at twice as many properties. This makes sense. And then you're going to transact, and in 5 to 10 years, financially, you're going to be way better off buying versus not buying. So with that being said, guys, hope that gives you the confidence. 3 things to do in today's market, even with all of the uncertainty. So go out there and continue on your journey to financial freedom. Make it a great day, guys. Thank you for joining me for another episode of The Financially Free Investor. If you found value in this episode or know someone who would find value in this information, please share with them, subscribe, and send us a review.